Happy Thursday out there, folks. This is Darius Dale here to present our macro minute for Thursday, August 18th, 2022. Starting with markets, we have stocks down small this morning, commodities mixed, crypto flat, dollar up, global bond yields down. Shifting to our market moving headlines, the Goldilocks data wave continues. So U.S. jobless claims fell for the first time in 3 weeks, suggesting demand for labor remains strong, while a gauge of manufacturing activity in the Philadelphia area, the Philly Fed Index, unexpectedly expanded in August for the first time in 3 months. And shifting gears, supply chain disruptions continue to ease as well. So we had growth up, inflation down. In corporate news, Cisco rose 6% after issuing an upbeat forecast for quarterly chip sales as chip supply shortages ease and the company is able to fill more orders. And then today I have an excerpt from our leadoff morning note today because I think it's a very important, just very important to get this out there and help everyone understand, because I've been having some very interesting, to say the least, conversations on Twitter, not from everyone, but certainly from a pocket of you out there who pay attention and follow our work, which we obviously appreciate. So without further ado, yesterday's retail sales and manufacturing trade inventories data were the latest in a series of positive developments in the U.S. economy. These developments amplify the probability of our bull case scenario, which admittedly has been largely priced into asset markets. Will the next 3 to 6 months of data sustain this nascent Goldilocks theme? Our answer is not likely, per our U.S. grid model forecast for deflation instead. As we discussed in yesterday's leadoff morning note, however, the style of deflation we have projected from a magnitude and policy response perspective is not draconian enough in isolation to do anything other than activate our base case scenario, which calls for the S&P around 4,000. For asset markets to achieve our bear case scenario, we need to see renewed persistence of core inflation momentum in the coming months. Those dynamics are nearly impossible to predict given the near unprecedented volatility we are seeing across the leading indicators of core PCE. That's trend mean CPI, sticky CPI, median CPI, etc. For what it's worth, it's okay to fly blind for a while as a data-driven investor. What is not okay is not knowing you are flying blind because of a narrow, uninformed worldview, which some of you might have on Twitter. If an investor is a raging bull or bear here, it's not because they have better forecasts. It's simply because they are not paying enough attention to the evolving distribution of probable outcomes. Finance Twitter is the only place in the world where being dogmatic trumps being a humble Bayesian. There, I said it. Anyway, big movers this morning. You have WTI crude oil up 2% to down 5% month over month. What's interesting, we're not seeing follow through in market-based inflation expectations. When you look at the 2-year US dollar inflation swap rate, that's still off 5 basis points, down 5 basis points today to 3.13%. That's off 25 basis points month over month. So seeing somewhat of a divergence today, this morning, in crude oil relative to sort of kind of 1 to 2 year inflation expectations. Shifting gears to our volatility adjusted momentum signals and probable ranges. U.S. dollar, nothing overbought or oversold today. U.S. dollar is bullish VAMs, kind of in the middle of the range. Gold, bearish VAMs, towards the upper boundary of the range there, not quite overbought. Neutral VAMs, 10-year treasury yield, sort of the middle of the range there. High yield credit spreads, bullish VAMs, close to the lower boundary of the range, but not oversold. S&P 500 broke to bullish VAMs today. That is got about 1.4% upside versus 3.5% downside. VIX bearish VAMs still in the middle of its range. NASDAQ 100 bullish VAMs, 3.4% upside, 3.6% downside. So a fair fight in the NASDAQ. Bullish VAMs. Russell still 2% upside, 4% downside. Not quite a fair fight. Bitcoin bearish VAMs. You got about 5% upside, 9% downside there. Ethereum bearish VAMs, 4% upside, 16% downside. Watching the Ethereum Bitcoin ratio closely, Ethereum's obviously been running up relative to Bitcoin. As you know, markets are pricing in the merge, and more importantly, this sort of kind of 6, 7 week, 8 week Goldilocks period as relates to the data. Can that momentum be sustained on a relative performance basis? If you start to see Ethereum break down relative to Bitcoin, that may be a leading indicator that we're sort of done with this sort of what could potentially be a transitory bout of Goldilocks. But so we're definitely watching that. Shanghai Composite neutral VAMs towards the upper boundary of the range, 1% upside, 3% downside. WTI crude oil neutral VAMs in the middle of its range. Ag bearish VAMs, 3% upside, 5% downside. And industrial metals bearish VAMs, about 3% upside, 6.5% downside. So with that, Darius Dale presenting our macro minute for Thursday, August 18th, 2022. Hopefully you got something out of that diatribe. And if you enjoy what you hear, you enjoy what you see, definitely come check out 42 Macro leadoff morning note. That's where I do all of my sort of best thinking. I don't even log into my email inbox before I get that note out in the morning. So I do all my best thinking in the morning when I'm writing that note. and again on Saturday mornings when I'm preparing the Around the Horn presentation for our 42 Macro subscribers. So tweeted out a link to the free trial in our Good Morning email. So definitely go check that out if you haven't already. Cheers.